I want to start by unpacking a little bit the OpenAI code red stuff, which we're still seeing play out in the news cycle. We obviously had some comments from Dario this week as well. And where I want to start the conversation is actually with the investors of OpenAI, because I've been thinking a lot about what they must be thinking with this news. Jessica, I wonder what your thought is here. What are you hearing from that group?
So if you're in OpenAI already, you're a believer. And you're looking at OpenAI and you're saying, fastest growing business in history, this company will get funded, it's all going to be great. I think what I'm hearing over the last couple of days is the people who are on the sidelines saying, which way is this going? We've obviously seen incredible growth. We have seen this company meet the moment, but, they're the ones pointing out the competition, is the attention too fragmented? What's going on with the compute commit? So it's always been a polarizing company, and I think it's especially a polarizing company right now.
Okay. So Laura, Jessica is talking about the people who are not in OpenAI. There is a group that OpenAI is relying on to keep this funding going for years to come here. I mean, we've talked a lot about their cash flow projections or lack thereof. I mean, does this pose a risk at all for them being able to raise this money, do you think?
I mean, I think that with all the rounds that we reported on over the last couple of years, there's been no shortage of demand. In fact, generally, there's more. The round size goes up. You see it also for the tenders, the secondary sales. And I think, we've reported on these SPVs, which are these vehicles designed to get like retail investors. All I can tell from this reporting is that there's still huge demand from family offices and institutions that didn't get into some of these rounds for like the name brand logo of the AI boom. But, for the very big pension funds that at the end of the day need to see a return and they need to see cash from these investments, they are, watching, I think, everything closely, and they're looking at the, indications from the major companies like NVIDIA and Microsoft about AI demand and if that's going anywhere. And they want to know that this is going to be a real investment. I mean, so far, if you invested a couple of years ago, there's a paper markup, but, you'd have to kind of be living under a rock to not worry that there's a bubble. And if you're coming in at 500 billion, which was the price of the last round, or the tender offer, how much more does that valuation have to go up for you to get even double your investment? So I think there's questions, but it doesn't seem to me that they won't be able to raise.
Right. And there's obviously there's the notion that if there's a company that is able to fundraise at two different valuations at the same time, well, maybe that signals something. Jessica, I'm curious what you made of Dario's comments this week. From our reporting, we've shown empirically that Anthropic is running a tighter ship, but also it feels like on the ground in the way that Dario and Daniela have steered their ambitions, they're a little narrower, a little more focused. Sam Altman, I mean, we had the news this week that, he might even be looking at a rocket company in some cases, right? That was a report that came out. Talk about the contrasting leadership styles here and which one you ultimately think is better for a company like this.
Well, what stood out to me with Dario's DealBook interview was actually, I think, how he's continuing to grow into the CEO role. I mean, Dario he's a wonderfully brilliant guy. And just seeing his public speaking over the last several years, my first takeaway was, he's feeling it, right? He's very comfortable. He, I thought was very compelling in that interview. He seems more confident when you
totally. He was owning the stage in that interview.
And again, if your revenue's grown 10x for 3 years, you should own it and you should take the stage. But I think it's notable because he's not always been the most natural public speaker, the natural in talking. He's always been natural talking about the grand sort of vision, but he felt very comfortable. And I think that is a reflection of the state of the business in the moment, the state of Anthropic's relative focus. And make no mistake, I mean, he left Altman and OpenAI for a reason. I mean, there is a very, very fierce rivalry between those two individuals and those two companies. The reason being, in Dario's estimation, much more of how AI is getting built and the ethics and responsibility around it. But
Right.
I think we're seeing just the tip of the iceberg, to be honest, of what he really feels about the situation. And, Anthropic has a lot going for it into next year with the business momentum, with the focus. Let's not forget the big picture concerns as well. They need continued business adoption. They need to continue to be able to fundraise from a growing number of partners to fuel this. By not being focused on the consumer market, I think that's a huge advantage for them in many ways. But the big questions that hang over the industry also hang over Anthropic.
Right. Lori, you're going to say something?
Yeah, well, I was just going to say, it's easy to sort of focus on Anthropic and OpenAI. And I want to be clear, OpenAI is, as far as I know, did not try to raise at two different valuations, which is a no-no.
Okay.
But the, there's hundreds of other AI startups. And in a way, we've been writing about this almost since the launch of ChatGPT. There's some startups can keep raising at higher and higher valuations, and some almost faster than you'd expect look for an exit. And,
Right.
We saw these waves of acqui-hire, or reverse acqui-hires, I think, like Inflection. And I think that fearful sentiment of the kind that's really risen up in the last couple months, it doesn't seem like, a crash reset of the same way that we saw after interest rates spiked a couple years ago. But I do think, if you are a mid-sized startup and, are growing, you may be incentivized to raise one more round of capital now before the gates shut. And we are expecting that things are going to stay busy until it's over. And,
Right.
and even maybe a little bit more. It doesn't seem like some of these startups need that cash right away. They've been so active, but they might, not want to risk it.
Jessica, I want to come back to you because you hosted your predictions webinar this week for our pro subscribers. And, you talked a little bit about the vibe in venture capital land right now. And it's a conversation we had on the show. We were talking about DPI and the idea that, you look at the data from PitchBook, fundraising is still at a 10-year low for these venture capital funds, or at least it's trending towards that if the trend continues. And yet I feel like we don't hear that much about DPI in the conversation anymore the way we did 6 months ago. No. What's the vibe among VCs these days?
Yeah, I'm falling victim to vibe reporting, which is sort of my least favorite thing to do. But yes, I do it. I think there are just real winners emerging. And I'm not talking about the OpenAIs and Anthropics. I'm talking about the Cursors and the Calcies and Polymarkets and all of that, right? And this is not, I think it's a sort of micro adjustment. The big question hanging over is like, how are these funds going to return capital? We've seen more M&A, we've seen a little more IPOs, but we're not seeing, the floodgates really, really open yet. But at the same time, you have funds that now on their books have 10x funds that, we hadn't seen a lot of before. So I think there's optimism a little bit among VCs again. What's happening in crypto is sort of cutting against that and making them a little bit gloomy in the moment. But I'm struck and from sources here things like, I just got this fund's returns and they look pretty good. So haven't heard that in a while.
And so, Laura, if we come to you, I am curious around the reporting questions that you have for your team as you think about this issue. Your team also follows the secondaries market pretty closely. What are the big questions that you're trying to figure out on the ground?
Well, it's not a question as much of a theme. And I think it's interesting. I think when you started your venture fund says a lot about whether these returns are going to look good or not. If you started, right before the pandemic, you're not probably having an IPO in 2021, right? If it's an early to mid-stage fund. So you kind of missed that wave. As Jessica noted, the IPO floodgates have not opened up. So it's hard going. A lot of funds are sitting on SaaS companies that are they don't, it's not really clear what the exit is. It's not clear if it's going to be PE. I mean, PE actually also has a lot of these enterprise software companies that are just not growing that fast. And they are now really at risk of AI. They're not AI companies. So I think, I mean, it's not as exciting for journalists because it's a theme that just keeps going on and on. But I think a big question, there is a question over the next couple of years, is what happens to all these startups, right? There's hundreds and hundreds of them that raise a lot of venture capital. They're not, they have revenue. They may even be getting close to cash flow, but they're not growing at the rate and at the size that would make for a public offering. And the buyers are also questionable. I mean, we just broke news on ServiceNow, which is a legacy
right.
My software company, as you know, and they're not. I don't get the sense that they're in the market for a pre-AI enterprise software company to well, then they want the AI companies or
right.
the companies that have like a real AI play. So there's a demand for the companies with AI, a real strong AI characteristic or feature. But there's just so many of them, and
right.
I think I haven't. There's various ideas, and I just haven't even really discovered what the exit is for so many of them.
Well, and to your point, I mean, the more likely reality is they just go after the talent directly and say, if you're working at one of these pre-AI companies or you're a researcher, I mean, forget the company, we'll just give you a big pay package and come help us. That's probably the more likely outcome here.
Maybe, but I mean, those talent wars are really about AI right now. I mean, and I think a lot of SaaS companies, yes, they have software engineers, but they have a lot of go to market. I mean, I think people are going to be changing jobs just like we saw in every kind of boom bust cycle. It's just, this one's a little bit elongated because these companies they weren't so capital intensive that they can't keep going. They're software companies.
Right.
And so they have a longer ride out, but they're also not growing. And in the past, that would maybe have been a PE play, but I don't think P is in the position to just snap them all up. So
great. Well, I want to thank you both for coming on. It was a busy week, and I'm sure next week will be just as busy. And Laura, I will not let you go another 100 episodes until you join us again. We're going to bring you back on sooner than that. Thank you to you both. Really appreciate it. And we will talk to you both very soon.